Our guest, our panelist needs no introduction. Jenny and GGV run one of the largest venture funds globally. We have 30 minutes and the idea is to maximize this session with her. We'll also do something different, if we just come off lunch. So if you have questions, please send it in and we can definitely take it even before, even during the session. Oh, somebody's already typing something and that's on Grab. Yes, Jenny, let me start with a big picture question. In terms of when COVID happened, you were sort of in Singapore. You did about 250 Zoom calls and you ended up raising $2.5 billion. Now that's an average of $10 million per call. How is that possible? How do you do 250 calls and raise 2.5?
Only during COVID.
But, for VCs, people don't ask you about fundraising usually. Yes. But how's fundraising been? And raising 2.5 billion when you don't have face-to-face meetings is not easy. So take us through the process.
Sure. Hi, everyone. It's good to be here. We are all back from lunch, so we can make this very interactive. This is like my fourth speaking slot over the last 2 weeks. So let's have some fun. Let's talk about very entrepreneurial stuff. So I think, Joji, to your question, so I would say that fundraising is always tough. In any cycles, any period, it's not an easy journey. And so in 2020, definitely we look at it as an anomaly. Why is it an anomaly, right? We had a couple of things going on at the same time. We had COVID on a global basis. Everybody is locked down. Everybody's at home, which on hindsight, from a fundraising perspective, is perfect, right? Because you don't have to go meet with your investor. Your investor doesn't feel like they have to tick the box to meet you in person. It means that you have 24 hours, and most of it very productively you can schedule. So it was a very interesting time. And coupled with that, actually, in 2020, there were a lot of government essentially printing money, right? And so we call it the COVID-induced liquidity effect, which means that capital, to be fair, is at zero cost, right? And so there was an eagerness to put money to work. There was an eagerness to meet new innovation. And with COVID as well, everybody saw that the world was going into two paths, right? It was the path where some companies were built for resilience, new business models. A lot of countries, enterprise, were all accelerating digitization adoption across the board, particularly in Southeast Asia. I think Southeast Asia is one of the key beneficiaries from this accelerated digitization move. So I think understanding the environment becomes very important, because I think the one fallacy that anyone would have is to assume that if you had a good time or a good fundraising period historically, the future is going to look bright. Future is always going to look bright, but only if you plan for it. So definitely it was an interesting time. And so from that perspective, very good time to fundraise. And I said being in Asia is perfect because you can have calls from 7 a.m. all the way to like 2 a.m. and you could cover the globe consistently, whether it's Asia investors or US investors or European investors. So that was the process. I do not go into fundraising assuming that's easy. I go into fundraising always ready to hear, understand what our investors want. So if I put myself in your shoes, it is no different from as an entrepreneur trying to fundraise for an investor, right? Whether you're trying to raise seed round capital or Series A or even growth capital down the road, you realize that the person sitting opposite you as an investor, they have their own strategy, right? They have their own, whether it's focused by sector or by stages. So really understanding who your audience is becomes very important in that situation, right? And I think that's number one. And understanding whether your product, whether your company or our fund is the right match, very important. Then thirdly, understanding who the decision maker, how that tree is going to work. You may start off talking to someone more junior, and then trying to understand how that decision making is going to ultimately look like becomes very important as well. So I would say always listen first, ask questions, clarifying if you can, and then ultimately if you think that the fit is there, then sell the hell out of it. So that's what I do. I've met a lot of our fellow GPs, even some entrepreneurs. You sit down and then you launch, you just stop. You just go into this and you like, are you even talking to the right fund, the right person? Is this the right strategy for this right time? right? So if there's any advice that I would take away from our last raise, those will always be the key tenet. As we go into the current, and maybe the follow-on question, as you go into the current environment, we are in an extremely complex environment, all fronts, right? There are macro considerations, there's geopolitical considerations, there is supply chain issues, inflation consideration in different countries as well. So it becomes even more important whether you are a GP or entrepreneur, like understanding who your audience, are they deploying at this point? What are they looking for, right? Do they have, maybe in our speech, if you are a GP trying to raise from an LP, understand who has a denominator effect. Many of matured LPs today have a denominator effect. They are matured, they have done a lot, they have made money for certain regions. They are not in a hurry to deploy. They are at the point where they are looking over their entire portfolio again, and then they are looking to say, okay, now once they're ready, they may then add certain names. That's one type of investors. A VC will be similar, right? Understanding how the VC is doing. Are they at the end of their fund? Do they have capital to deploy? What's the health of their portfolio? If their hands are full trying to fix their companies, they're not going to give you that capital for your growth, right? So that's one. Then you have on the other end of the spectrum, there are investors who's come across new capital, new pot of capital. For example, our friends in the Middle East. So if we go by country, some have just added, trillions in terms of available capital to deploy, right? So understanding whether it's an LP or a GP, whether they have new capital. Folks that have new capital means that they are faced with a blank sheet of paper, and therefore they can actually go after certain strategy, right? Could be by region, by country, by vertical, by niche. Again, understanding that becomes very important as well. So I'm keeping this very top level, but obviously we can drill down. And I'm trying to, there's definitely a lot of parallel between what a GP does as a VC and what you as an entrepreneur does in the whole fundraising journey.
Yeah. Jenny, you talked about the current environment being very complex. So where is GGV in the deployment cycle? Are you speeding up deployment? Are you slowing down? Are there specific countries you're looking at or geographies you're looking at, sectors?
Yeah. So we've been around for 22 years, and over the last 22 years, we have seen 8 cycles of up and down turn. This is like our 9th cycle. So as a fund, we've always believed that time diversification is very important, right? So in 2020, while I said COVID-induced liquidity, and then going into 2021, many funds actually veered away from this time diversification and actually increased their pace substantially. I think we have some great names, big names, who actually end up raising funds every year, and they were deploying 100% or 80% or 100% of their fund in a year. That's not us. I think we have seen enough down cycles, also enough up cycles to know that consistency is key. So as a GP, we've held to our 2.5 year pace. And so today, as of today, we have deployed half of that 2.5 billion, which we raised in 2020. So we have over $1 billion plus in dry powder. So the answer is yes, we are deploying. The bar is definitely high. In terms of where we are deploying, our strategy is global. So we've never been a country-specific fund, though we've always followed the talent, we've always followed innovation, and therefore we've been able to capture returns from those regions. So in that situation, I think that in the US, where we're seeing continue to see good growth companies, they tend to be in the enterprise space. And enterprise, you can talk about infrastructure, software, open source, cloud migration, all the way to software that enables small, medium-sized enterprise. So that's one big area. China is a very interesting one. I think probably there's a lot of discussion about China. I don't need to go very deep, but the way we view China is that technology is going to be bifurcated. Funds will be bifurcated. What does that mean, right? So technology being bifurcated means that the hardcore technology will tend to go into the bucket that will be most ideal for R&D funds, local, given that there will be policy aligned to what government is trying to support. Most likely, these are companies that will list domestically as well. Other sectors like EV, automation, enterprise, open source, brands, tend to be less data sensitive. And these are also companies with the ability to sell globally. You can sell robots globally, right? Cars, electric cars can be sold globally. So in that category, I think still remains an investable area, which we actually feel that, recovering from COVID, these are areas that will continue to kind of, grow at a good pace. And so those are areas. I think Southeast Asia has actually grown in allocation. I see Joji a bit more over the last many years, many of you a little bit more. I've been here in Singapore for the last 2 years. Very honored to have met many of our entrepreneurs. I would say that comparing the quality of entrepreneurs today in Southeast Asia versus 10 years ago, we've gone from a C to a B. So it's great improvement, which I hope that will continue to improve the quality, the depth of entrepreneurs here, as well as quality and depth, and potentially size of companies in Asia. So Southeast Asia a lot, where obviously we can talk about it a little bit more in terms of sectors.
So many. I have so many follow-up questions from what you said, but let me start.
I got to keep my answer brief.
Yeah.
Now, but
No, but let me start with Singapore,
Yes,
Southeast Asia.
yes.
You opened an office again in 2019. What changed this time around for you to come back to Singapore?
So it's a really great question and also good observation. I think at GGV, the one defining thing is that we truly are a global team. Our partners can move and operate in the US, in China, and in Asia. There was a major event that happened in 2018. Perhaps here in Singapore, we do not pay as much attention, but it was really the start of the trade war, right? And so in 2018, the start of the trade war marks the increased tension between US and China. Sometimes we don't feel it. We feel like this is, the giants are fighting. Okay, we're just trying to digest this. But from our vantage point, we felt that the world, economy, in terms of all aspects, is just going to change, right? We see China being put to the spotlight. We started to see, China again was stepping up in terms of their consideration, right? Whether support or lack of support for larger platform companies. And so we do see shift, push and pull factors. And therefore, when we follow the flow of talent, that's where we see the talent going. And so we do see talent coming down to Southeast Asia. And so in 2019, we decided that while we've been making investments locally along our themes, it's actually time to set up a physical office because we actually see more flow coming into this region.
Yeah. You spoke about flow of talent, but what about the flow of capital? If let's say global capital doesn't flow into China as much as it was in the past, do you see some of it coming to, say, Southeast Asia, Indonesia, or countries like India?
Yeah, so I think capital flow is always interesting, but capital flow tends to be very transient. And if you track the public market, I mean, it shifts constantly, right? So on the public market, definitely shift to where the best returns are. To be fair, I think now with the increased rates in the US, bond yield has gone up in the US. On a relative basis, capital is flowing back there to the US, right? Just at the very top level. But on the private market, I think there was a period in time after TD's IPO last year in June, where many of the larger funds have decided that it may be very tough to come in at the pre-IPO stage, right? And so they've kind of stayed away from the later stage. As a result, has then gone on to try and find the so-called next unicorn in Southeast Asia. So we did see capital on the private side coming into Southeast Asia from Q3, Q4 of last year, going to this year. But obviously today, as we look at it, the valuation on a global perspective have equalized, right? And therefore, we think that we are not seeing additional or increase in flow. In fact, people are reevaluating and factoring in the risk profile.
Yeah. Just again, a related question to what you just said, Jenny, and you mentioned this earlier too, in terms of the speed of deal making, what was happening last year. Some funds were deploying 100% within a year. What we saw in this part of the world, even in countries like India, a lot of US funds, including everybody from Tiger, A16Z, and DST Global, all of them, they were doing deals at record pace in Southeast Asia and even in India. And it's sort of, most of the local funds, growth funds here, couldn't really compete at the pace of the valuations that they're offering. Now that these funds have all stepped away, two related questions. How does this impact growth stage funding in Southeast Asia? Do you have a situation where many of these companies are sitting at valuations that they can't justify? And does it also open the doors for firms like you or growth funds here to come in and invest in these companies?
Yeah, I think definitely the answer is yes and yes. So I also want to highlight that the private, for sure, right, what we're seeing, private market valuation has come down. When the demand-supply equation, tilts the other way, definitely there's less new capital for growth financing in this part of the region. But this is not unique to Southeast Asia. It is global. Public valuation has come down by anywhere from 50 to 80, sometimes even 90% on the public valuation perspective. The great companies, category leaders that was trading at maybe 30 billion is now at 5 billion, right? And so when that happens as well, definitely, if you're still a private company, you're still in the growth stage, but not quite at the same size and as close to liquidity as the public ones, then you have to be prepared for any new round of financing that will be discussed today. There will be a question on valuation. And I would say that if you need the capital to do well, to continue your leadership, just take the capital, right? Because it's all about winning the game at the end of the journey, not on paper, right? So I think that you're not alone. It is global. And therefore, it's all about what you can do with the extra capital. In the past, raising 50 million may mean nothing because all your neighbors are raising 50 million. But today, if you raise 10 and your neighbors don't get a cent, that 10 million is going to feel like 100 million, right? So again, it's relative because with that capital, you can quickly accelerate your own path and growth and talent versus others who actually don't have those resources.
So do you see a lot of down rounds happening, convertible notes happening,
Yes.
debt structures being set up?
We've been tracking deals on a global basis. And again, over the last 3 quarters, most of the financing, 80% of the financing that we've seen across the stages are at flat or down rounds. There's only maybe that 10-20% of companies, probably those that are still in the A, B round, that has grown like, showing 4x growth. And, companies like that have been able to maybe get equal or slight up round in terms of valuation. So again, it's stage dependent, but definitely majority of financing is done. And that's because we came off a huge high in 2021, right? Back in 2021, if you're looking at SaaS-type companies, you're looking at a 50 to 60 times PS, right? Today, Snowflake is trading at 8 times PS, right? And so are you a Snowflake yet? Probably not, right? And so if you get 8 times, very good. Likely because of your size and your growth, maybe you get 10 times. That's great, but don't expect a 50 times.
There are 2 questions related to valuation, what we just discussed. The first, I'll just take the first one from the audience. Grab's listing, it was valued at 40 billion. How did the IPO change the narrative in Southeast Asia and your investors in Grab?
Yeah, we are investing in Grab. We came in at Series B at 40 million in 2014. So it's investment returns is always relative. So I would say that, if there are LPs in the room, you have to look at if you need to adjust your strategies, right? In certain times market, it does reward the later stage guys because you come in, you kind of cream off the top and the public market is rewarding for those type of risks. Today though, I think we are back to if you're venture, if you come in early, you do get rewarded for taking that early stage risk. And you're rewarded because even if the top comes down on public valuation, you still have a bit more room, right? So definitely, if you're LP looking at your GP strategy becomes very important. We think that on the venture market, the emphasis and trend right now is actually venture. It is early because no one knows when the IPO market is going to reopen. Could be a year, could be 2 years, most likely 3 years, right? And so when you don't see, and even if it opens, what kind of valuation will we get back to? It's a little tough to predict. So I would say that there's been a bit more, there's a lot of liquidity still in the market because GPs have raised quite a bit of capital. So later stage deals will focus on category leaders because, when the tide recedes, only the leaders are left standing. When the tide comes in, the leaders will be, taller than everybody else. And so I think on the later stage, there's definitely a lot of focus on who the category leaders is in those category. And then I think on the earlier stage, you can look a bit further, so 5-10 years down the road, and therefore it's more about innovation, technology, right? You're building the next set of companies. And so I think that's definitely, we are seeing a lot more interest on the earlier stage side.
Yeah. I'd like to take the second question too. When valuations touched record highs over the last 2 years, why didn't LPs question these deals?
I wish I'm an LP and would ask the same question, but I think LPs are. But sometimes I understand where they are, right? We've had very good, strong institutional LPs on a global basis, and they trust the GPs, right? They are not macro. They don't play the market. They trust that the GPs will do the best decisions for them. Frankly, no one knows, when that party was going to end, right? It ended in Jan when the war, Russia and Ukraine happened, and then inflation reared its head. So I think there's always a read like that. Definitely, there are LPs who do asset allocation, and so they would have enough exposure on the early side to go the long term. They also have allocation on the later stage, including public equities as well. And so today, when I talk about the denominator effect, it's real, right? Because their public value was doing so well. If you ask the LP, they were getting so much money back, right? So returns was good. Even up until early part Q1 of this year, they were getting companies that their GP had invested. Cash was coming back as they went IPO and distributed the cash. And then overnight, the Q2, Q3, as market public comes down, basically the pot between public and private just went like that, because most private valuation does not react or adjust, right, as quickly as public. So they are facing those effects at this point.
Got it. I'll just take the last question there on our screen. How does a US fund manager, like a firm like GGV, capture the policy-driven opportunities in China as opposed to local RMB funds?
We have both, so. So we are able to capture both. We have the same team looking at all the sectors I talked about, whether it's core tech or applications, consumer tech or enterprise tech. And then we use the same bar. And so if we feel that this is one that would be more policy aligned in China, likely to get listed in China, we would then use the RMB fund. So I think to capture 100% of the China opportunity, you actually need to have bifurcated fund in this case.
Yeah. I'll just shift gears a bit, and one of the common conversations amidst all of the funding, so-called funding winter, one is falling valuations. The other is the layoffs that we are seeing in tech companies.
Yes.
Most of the founders or entrepreneurs have never seen a cycle like this before, because most of these companies did not exist during the last cycle. So what's the role of an investor at a time like this?
Yeah, I think it's very, very important. We have seen, as I mentioned earlier, I've seen 8 to 9 cycles. Finally, we have a cycle in Asia. So if you're an entrepreneur, you're an investor, you're a GP, this is the time to learn, right? Going through those cycles will make you stronger for the many cycles to come if you're in business for the next 20 to 30 years. So at the top level. So what's important? I think today at board discussion, it is very important if you're an entrepreneur to really engage your investor around the board, deliver your bad news, deliver your concern, have and leverage your board members in active discussion. Sometimes when markets are growing, and markets has been kind of on the positive growth for the last 10 years, entrepreneurs have not seen downturns. VCs, investors, board members have not seen downturns, right? And so in the past, we've learned only to be cheerleaders, which is actually not great. There are some of the boards that I've participated here in Asia, sometimes as an observer just to listen in. I realize that's the case, right? The CEO goes on and report, everything is out there, but the bad news is last 2 pages. The great news, good news is all the first 20 pages, right? And at the end, there's no time to discuss the issues, the challenges. Actually, it's so hard to get a good board and then to organize board meetings, which you should if you have a good board. So the best time to do it is to assume that they have read the numbers, they have read through whatever updates, and engage your board members in the discussion. For example, if you have 12 months of cash run, what do? Is this the right time to go fundraising? How can I go fundraising? Of the 10 projects that I have, should I cut 8 and focus on the 2? Having a discussion means that if you go down and execute on certain direction, the board is aligned and they know. Now, what does that mean, right? You've had 10 projects and you cut 8 to focus on 2, that means your budget will be affected, your revenue projection likely will be affected. But having those tough conversation up front means that you are in this together. And there's no situation down the road when you're down 3 months and you say, guys, I'm down to 3 months of cash because I overspent on this other 8 projects. Where are we, right? So every deal is different, every company is different. I encourage all GPs, VCs, board members to really take an active role. This is a time where your value, your advice, your real advice is going to be very helpful to your entrepreneurs. Entrepreneurs, it's okay to share bad news. The world is in chaos. right? If you go to a board meeting and everything is rosy and nice, something is wrong. And my first question is, tell me all the bad news, right? And then let's discuss. If you have a 2-hour board meeting, spend that 2-hour board meeting to discuss. At the end of that, you ask your board members, these are my asks. I'm going to fundraise. I think it's going to be tough. I want to talk to 10 investors. Can you give me a list? Are these the right 10 investors to talk to? Because VCs know other VCs. They know if our peer, I know, who are the VCs who's deploying, who are the VCs not deploying, who are the VCs that has problems with their portfolio. You may not know, right? Because when you see them, they all look great on stage, right? But it's not, right? So again, that's really asking the right question. And your investor, your board members, they have to help you, right? Like if they say, go, come on, you should still go, something's wrong, right? So again, and then they say, oh, I don't like this valuation. 200 is not great. You should be asking for 500. Ask them. At 500, will you lead? If they say, oh, I'm sorry, I will not, get someone else to lead. Again, it's very different. So I want to make this very, very real because I have seen that in up markets, it's so easy to be a cheerleader, but it's so difficult to deliver the right news and then to just sit down and say, let's make the right decisions. Right? So I can go on and on, but I do think that this is the time. This is the time to engage even more. This is the time to bring in the support and help that you need, and then just lay the table out and say, this is the issue. Right? If there's team issues, the business models issue, if there are mistakes you have made, come out and say, hey, we over-invested, we thought this market was going to be big. For example, I think I'm going to expand. Let's say I'm a Singapore company. I'm going to expand to China. I'm going to hire another 10 guys, go to China. Any discussion like that at my board, I would say, no China for the next 6 months. Because you cannot get there, why are you hiring? What's the point, right? If you have 10 months cash, focus on the region, focus on your business today. So again, but to have that discussion means that you will walk away, everybody aligned. Because I'm sure other board members will say, how come you're not in China? The board member is not in China, right? So just giving different examples, but in any case, this is the time as investors to show your real value. Entrepreneurs to really use the opportunity to train yourself, train your team. Macro is helping you, right? In great times, I spoke to a listed company in Singapore, and he said, last 2 years when everything was glory and rosy, it was stepping on the gas all the time, and the team was all pumped up. Today, he can go to the team and say, guys, it's not about stepping on the pedal, it's about making money. And he said, for once, every team leader, they're on board, because they understand, right? Again, it's the right time to do the right thing.
Yeah, just related to our board, Jenny, you were appointed to the Temasek board last year. Just want to know, what is it that you bring to a sovereign wealth fund like Temasek? Is it getting them to do more tech? Is it getting them to do early deals, or maybe do more deals in China, or invest money into more GPs? What's your role there?
Yeah, well, I think Temasek is a super GP, and they've done many, many things well. Many things. I think being on the board have allowed me to see it. I think from a long-term strategy going early stage, they are 40% in early stage. You may not feel it, but it is. In terms of allocation on global, they've also been very well allocated, capturing China, US as core markets, increasingly looking at India and also Asia as well. So I would actually say that, board members, we're not operators. Same whether it's Temasek board or any board that you're in. The key thing is looking at, number one, strategy. Are we on the right strategy? Everything I talked about earlier is, are we on the right strategy, number one. Number two, we talk about people, organization, bench strength, because we are not just here for today, we are here for the next 10, 20, 30 years. And then lastly, thirdly, where the resource is being done. So same thing, I think at Temasek, that's what happens. Very fortunate, I'm a very straight shooter. And so it definitely helped to have a bit of a practitioner in the market, being able to tell them what I'm seeing and sharing.
Got it, interesting. We're running out of time. I just wanted to quickly change the conversation to, how do you and GGV look at the cryptos in the Web3 space? And are you looking at doing deals in that space, for example, in Southeast Asia?
Yeah, we have. I think that I've studied the blockchain technology over 15 years ago. As you know, I spent 20 years in China. China is the first to come out, like if you play game, virtual currencies, right? Like to a certain extent, that's what it represents, right? Different form of engagement in the different market. So definitely we've been paying a lot of attention, but to us, it wasn't core. But recently, in the last 3 years, we've started to make small steps. I would not say we are expert, but we're definitely learning. Where GGV has chosen to play, essentially it's a horizontal and a vertical. So on the horizontal side, which is the platform side, we have been spending a bit more time looking at blockchain, cross-chain technology. The way we understand blockchain is we liken it to the era where internet went into a multi-cloud situation, right? When you have Amazon and Azure and in the US, and then you have Ali Cloud, Baidu Cloud, you realize that you need technology, you need tools to be able to bring companies onto this multi-cloud environment. So similarly, our thesis on Web3 in this case is on cross-chain technology. So we have made small checks and also larger checks across our funds to try and understand a bit more on the cross-chain technology. Anything that will help to enable the ecosystem, including eKYC, data management, analytics, fraud detection. Those are areas that we have spent time. On the vertical, some of you may know, I am a gaming investor. So I've been investing in games as far back as 2004. So tracking it as we went from old PC internet games to mobile browser. So in that vertical, we are spending and have invested in the whole metaverse build-up, from game engines all the way to platforms and content. And so when it crosses into GameFi, that's our little kind of Web3 on the metaverse. So for us, it's very thesis-driven. And we feel that the best way, if you're not the first fund in the new category, is that you find your spot. And for us, that's kind of the spot that we are playing.
Yeah. Let me just take a couple of audience questions before we wrap up. Many funds find successful companies in the West and China and try to find similar ones to back in Southeast Asia. Is that strategy still valid, or do you have a different strategy?
Yeah, that's not what we do. I think we are pretty thematic, and therefore we do not feel that the next era is about bringing just companies from the West to China and then to Southeast Asia. I think Southeast Asia is very, very unique. We don't have a lot of time, but just at the top level, we have what we call our air, land, and sea strategy. So companies that have business, so in Southeast Asia, if your model is a light model, like you are Amazon Cloud, right? Cloud hosting. This is one area where you can have one light business model and then go global with it. In that situation, in areas like cloud infrastructure in Southeast Asia, we do not believe that local companies have a chance because this is one area that the West have come in many years back, they have advantage. If you are trying to be the next Facebook for Southeast Asia, it's only Facebook because it is an air model, right? It's a light enough model. They have really gotten a lot of traction. The user behavior is more universal than different. And those are the ones where we do feel that local companies less of an advantage. The place where local companies have some advantage is where your business is a bit more land and sea. So, land, for example, Grab is one, where it's a bit more land model, where it's an operating model, but very different, right? Uber tried to come to Southeast Asia, Didi tried to come to Southeast Asia. It's the same thing, right? Ride sharing. But the reality is not, right? Because you have to work with the local ecosystem, and therefore that local ecosystem requires, Anthony to be running around in a tricycle, right? in Thailand or, in Vietnam. So localizing it, working with the local ecosystem, in that situation, I think the local companies will win. When we go down to sea, this gets into, I fight battles, right? So my analogy is all war related, unfortunately. So then there are business models that is highly reliant on regulation, licenses, policies, right? If you are in the e-payment space, e-KYC space, digital banking space, you actually need to go even lower. So in that situation, local companies can win, maybe even local companies. So that's how we look at it. I think you always have to make it real for the region. I don't think there's an easy playbook where you learn from the West and it comes. The world right now is in such different phases of development that there are areas where Asia is ahead and other areas where China may be ahead. And, US definitely on enterprise side has been doing very well.
Yeah. The next question I want to take is the market is sitting on record dry powder. So are we entering a season where too much quality capital is chasing too few quality deals?
Potentially, but, as a fund, we actually have a 5-year investment period. It's just that you hear this funds raising every year. Instead of 5 years, we invest in 1 year. So I do expect that new fundraising will slow down. The typical fundraise for VCs is about 6 to 9 months. If you get your fundraise in 6 to 9 months, you're like a Class A fund, very good. This is in normal times where you meet people in person. And therefore, I think this time is going to go stretch out, meaning that whatever dry powder that investors have will be invested over the next few years. So timeline is there. It can be stretched out. So yes, I think if you're a great company, you will always get funds as long as you're reasonable about valuation. But if you're not, then I think you need to work harder to make sure that your business model becomes optimal for it.
Yeah, my last question maybe more is on a personal note. So this morning we had a panel on women in the VC space and how there are very few women at partner level at most VCs. You've been in this sector for over 2 decades. How have you navigated this space and what has changed over the last 2 decades?
Yeah, I think there's a lot of guys in the room. It's a male-dominated VC, but there's no guarantee you'll do well. So it doesn't matter, right? So if you're a woman entrepreneur, you're a woman CEO, it's okay. You know, I think we all have an equal chance. So I maybe just a simple answer to it is that at the end, it's mindset, right? You do not go to a battle thinking that because you're a woman, you're behind everyone. You go to a battle knowing that you need certain ammunition, certain support, resources. As long as you can gather those resources and go to it with the right mindset, you will win the game. Anyone who goes in thinking they have it made for them is most likely to lose, right? So I maybe that's an easier, shorter answer to say. It's all in your mind. When I went to China 20 years ago, I wasn't born of China, never been to China, don't quite speak Chinese. I went in with an immigrant mindset from zero. I learned from everyone. I listened carefully, make as many friends as I can. Of course, hold my own judgment in terms of what's good and what's not. Hard work is fundamental, right? And then you need to rise above, analyze, and then make a final judgment. You may make some mistakes. Make sure that you learn from your mistakes and then quickly recover. This game, whether you're a CEO, startup, or a VC, you can recover. I've been in this 20 years, right? I can go on and on about all the turnarounds, right? So it is possible. So always picking yourself up, re-looking and re-strategizing becomes very important. Long-term business.
Sorry, but Jenny, when you said you went to China 20 years ago, I understand that you had to pay like a penalty of $300,000 at ST Engineering for breaking your bond. And $300,000 20 years ago was a huge amount. So what made you take that risk, pay such a huge amount and go to China?
When I went to my boss, some of you who knows me, right? My first job out of school, I'm sorry we're taking a bit more time. So when I graduated, Cornell engineer, undergrad, master's engineering, and then I was posted to work as a fighter jet upgrade engineer. I built jets. Most VCs don't. So honestly, I didn't really understand how much it's going to take to break the bond. But I always had the vision that the world is bigger than Singapore, right? That there was something out there. I had opportunities to work and interact with entrepreneurs when I was in the US for my school, and I realized that it's a very interesting world. It's about creating new products, new innovation, new vision, and you can try and change the world, right? This is a perpetually optimistic a bunch of a community, and that's what I wanted to do. So when I went to my boss CEO at that time, this was 2000, internet bubble crash, about to see a 9/11, and I said, I just feel like I have to go out and strike out on my own. I had this burning mission to go figure out what this world is all about beyond Singapore. I had no idea the bond was 300,000. I shook hand with my boss and I said, I have no money. I don't come from it, my dad was a primary school teacher. My mom has never worked in her life. So we're very humble. I had to get scholarship to go for my college. The only money we had went to my brother to support his college, his elder brother. Right? And so I went and I said, I have no money, can we negotiate? I just started, that was my first deal. I think the first deal that I did for myself actually went pretty well. The bond amount would have been $1 million if they compound everything. But yeah, it was 300,000. I did not calculate all the rewards. It was not a huge ROI thing that I did. Probably if I did it, I wouldn't have made the move. After I decided, I made the decision, I had no backstop. I'm one of those who do not give myself a backup before I take the step. I just felt the calling was there. I was young, I should do it. Great time, why not? World is in chaos, let's do it. And so I did it. And I borrowed money. So I borrowed big phone calls, just like some of you when you start off your startup. And thankfully, I had people who love my passion. And so it's been good. It's been the best investment I've done. my first investment.
Yeah. Thank you, Jenny. I think we'll wrap up with that story. Great session. Thank you, Anton. All of us enjoyed talking to you. Thank you for taking the time to be with us today.
Thank you. Good luck, everyone.
Thank you.